reason why most of us are not profitable is because we don't have a strategy. We are always jumping from one strategy to another. For you to become profitable in trading, you need to have a system, a strategy that you need to stick to. And for those of you who does not have strategy, in this video, I'm going to teach you guys one strategy, a profitable strategy that if you can learn it, you can master it, it's going to make you a better trader. You should know in any strategy you use, you are likely to make loss. Yet, but the good thing is that the profit you make should outweigh your losses. So I'm not saying this strategy is 100% profitable, but it is 90 to 30% profitable. And if you make it a good risk to reward ratio, no matter the losses you make, your profit should still outweigh your losses. So in this video, I'm going to show you guys a profitable strategy that you can use to start making money off the forex or crypto market. This strategy works in all the market, either forex, crypto, or stock market. It is simply based on price action. I'm not going to make use of any indicator, but we only make use of price action, market structure, and supply and demand. And also be looking at other things. So before we get right in, please go to like this video, subscribe, and turn on the bell icon. Now to begin with, the first thing you need to know before you can actually make use of this strategy that I want to show you is that you should be able to read the market direction, be able to spot a bullish trend, bearish trend, and reversals. So before I show you in this particular chart, I would like to make use of an illustration so that you guys can understand. You agree with me that a bullish trend on an uptrend consists of a series of higher highs, higher low, higher highs, higher low, and higher highs. So once we are in an uptrend, what we do is to what? Is to buy. They'll be looking for a buying opportunity in an uptrend. Also, in a downtrend, consists of series of lower lows, lower high, lower lows, lower high, and lower low. And if we are in a downtrend, we're looking for selling opportunity. And also, you should know that if the market is rangy, there's no clear direction, we have series of equal highs and equal lows like this, we should know that we should not trade this market because there's no clear direction. And also, you should be able to spot reversals. By spot reversal, I mean, if for example, market is making a series of higher highs and higher lows, higher high and higher lows, higher high, and then market start consolidating and break below this previous higher low. If you know that market has changed direction from being an uptrend towards a downtrend. So immediately price below this previous low. Yeah, this previous higher low because it was this previous if you get this break of straight to the upside and this is another break of straight to the upside. And this was the most recent highs get higher. And instead of to create a new higher high, what you did was to create a higher low and then market went below this previous lower low. So immediately saw that prices has gone below the previous lower low. What you should be looking for is to know that okay, market wants to change direction. So the next stage you expect to see is that market should come back, either it gets to this place and start trading downward, or market can price can start to come back here, retest this level. You can either retest this level or go anywhere, or market should go back here and start a creating series of higher lows. So this is the basic concept. So if you are see series of higher highs and higher lows and market started change direction, goes below the previous higher low, you know that market has changed direction to a downtrend. And also if we are in a downtrend, market is creating series of higher lows, sorry, lower lows and lower high, lower low and lower high. So immediately you see that where I decide to break above what above this previous higher low, this previous lower high right here. So it's lower high. When you're in downtrend, it's called lower high. Here is called lower high. Right here is called lower low. This lower low, lower high, lower high, lower low. So if you're in a downtrend, I see that where is break above the previous what the previous lower high simply means that market has changed direction. And if you're looking that you know that we will start going into bullish phase on an uptrend. So market will start with a series of higher highs again. So guys, this is the basic. So the next thing I'll be doing is going to the chart to show you guys how, how to identify this in the chart. We're going to start from here. And guys, as you can see, this is our lower high. From this lower high, price creates what? A lower low. And there was a pullback. Price creates what? A lower high. On that lower low, then price creates an what? Equal high at this particular place. As you can see, price create this lower high. This is also called lower. We can't call this lower low because it is not went down. But as you can see from this particular place, price create this particular what this particular lower high at this place. So we're expecting price to change direction, but price did not change direction at this particular place. So in the time price breaks below the previous lower high, don't run and start buying. Wait for price to like come back, retest it and go up again. But as you can see, price did not retest it. So price from this place creates a lower low, lower high, lower low, then a lower high at this place which breaks above the lower price did not start going down, going up or rather price credits and lower low, then lower high, then when to create this lower low at this place, as you can see. Then from here, price create this lower high, and all these are consolidation at this particular place, internal structures, and from here, price, because these are also internal structures you get. But this was kind of a break of structure because the previous lower highs were this. You can see price break structure from this particular place. And all it did was to retest this place and price started trending upward. And from here, price started creating series of what? Series of higher highs, higher low, higher highs, higher low, higher highs, and this higher low. And you cannot really call this higher low. This is the higher low, and then another high at this particular place. So this app market structure is if you can draw this accurately, you'll be able to tell the price direction. Now let's get into the step 2 in our trading strategy. That I've said, in this trading strategy, we make use of supply and demand. Supply and demand as areas of aggressive buys and sells. The demand zone is a zone where there is an aggressive buys, and the supply zone is a zone where there is an aggressive sales. So readable for you to be able to spot this in the chart, I would like to use an illustration first so that when we get to the chart, you guys be very clear. So if, for example, we're in an uptrend and there is a series of consolidation already at this place, and there is a forward push, a push market upward. You get this particular place, you get before this forward push, this is a demand zone because at this place, price was ranging at this particular place. Then suddenly a lot of buys came in, and we saw this market, we saw this price push. You get this means that the next time price comes into this particular place again, this particular zone again, people would love to sell because this was actually a very good place for people for buys because it was at this place that buyers came in before. So this means that this zone is a good zone for you to sell. You get for you to buy rather, and this place is a good zone for you to buy. So The entire price coming to this particular place, you should be looking to do what? You should be looking to buy. Yet these are demand zone works. For supply zone too, supply zone also, if there's it is quite similar. If there's a series of consolidation at this particular place, and there's suddenly price say and price move downward. Yet so the next time price come to this particular place again, lucky to say, because this was actually a very good place for people to say get, which means that anytime price come to this particular place, we should be looking to do what? To say get. This is simply how it works. So to spot demand zone, you should be looking for a place where there is a consolidation. Another consolidation there is a large price movement to the upside yet. While for the supply zone, after consolidation, there should be a large price movement to the downside. So guys, this is a weak chart. And before I show you this, the first is we to identify the market direction, the trend direction. So if we start from this particular place, we see that the market was making series of higher highs, higher low, higher highs, higher low, higher highs. There's an equal low get, and from market get to this particular place. You understand? So we show that we are in an uptrend because we're in an uptrend. Let's assume this was the last place our price went to get. So at this particular place, we can see that there was an upward push at this particular place. You can see these two large candles at this particular place, which indicate that this is a demand zone. And as you can see, when price comes back to this particular place, we're looking to buy. And if you check this particular trade, I screwed it up so you can see that if you buy this place, you can see where price went to. Price went up high at this particular place, which is actually a very good trade if we take it. So how can you spot this one? Just like I've said, to be able to see large candles get after consolidation, you can see there's a consolidation at this particular place. After consolidation, you can see these two large candles. I'm gonna leave this rectangular box. And let me zoom this so that you guys can see it. As you can see, under this small consolidation, you can see these two large candles. Yet these two large candles. So to draw a good demand zone, you should the candle before the large movement, if you draw it at and you draw it at, and as you can see, when price come back to this place, what happen? Price should, and if you make use of your long position too, these are this place. You see that, and you target the next I which was actually this place. I'll explain why we target this in a bit. And your stop loss should be up, should be what above this previous eye. As you can see, this is what a 4.15 is the watch. Usually we target this eye because if we check at this place, this was on. Let me zoom this so that you can see what's on the screen. This was actually a supply zone before at this particular place because you can see there was a positive movement down at this particular place and price went to get it was this high price went to before price gets actually create this one. You get this was the highest point. Yeah, this was the highest point. The price created this week. I wish it's not a I because this I did not break any structure. This I broke a structure which was at this particular place, as you can see. So obviously this was the most recent swing high. So we have to target this swing. You can see price smash already smash our TP at this particular level. So we show that this strategy works. You get so guys, this is another example. From this chart, we were in an uptrend and because market was breaking series of higher highs and higher lows, so breaking straight to the upside, as you can see. So at this particular place, we saw that there was an impulsive measured upside. So what we do simply was to mark out the last candle that caused the impulsive movement. We draw it, and as you can see, price came what to tap in this particular place before price started going up again. This actually in the most recent chart you can see. So price market is still moving. Definitely, if you enter this trade, you should be targeting what this particular up because this was the previous swing you can see, and your SP, your stop loss should be above the previous swing low. Yet, so guys, basically this I can really trade supply and demand. And also for a good demand zone, a good supply demand zone should break structure. What I mean by breaking structure you can say at this particular place there was a breakthrough strategy upside. Again, this was the most previous swing at this place, and as you can see, this impulsive movement caused um the breakthrough of structure to the upside at this particular place. And also for a good supply and demand zone, there should be a fair value gap. You can see the wick, this box, the wick of this flat candle and wick of this third candle did not meet, and there's a space in this circle candle. There should be three candles, one, two, and three. So the wick of this space candle, this circle candle did not meet, so there's a space. If we see into like this, this is actually a very good Amazon for you to buy. So guys, you also should go and make my research on supply and demand. So this is actually a very good strategy that you can use to trade it. So guys, this will be it for this video. If you would like, subscribe, turn the bell icon, see my next video. Peace out.